Hello, everybody. So the good thing about the earnings season being done is that we're back with MSTR and we are back with our weekly buys. It seems like maybe we'll get, 4 to 8 weeks out of a year where he's not going to buy Bitcoin because of the earnings season, but Saylor bought more. And usually in these videos, I reiterate the usual, right? It's the key to learning. But today I'm going to talk about some of the weekend FUD. But, I would usually reiterate and tell you, of course, that MSTR is the black hole. MSTR products are its shares, its common shares, right? MSTR stock is a product that MSTR sells, and by selling that product, he accretes and generates more Bitcoin. But of course, right now, we are seeing less and less common equity issuance. And he said he's not going to do the common ATM. That's not going to be the leading product flushing capital from the old world to the new world. No, the leading products flushing that capital are going to be Strike, Strife, Stride, and Stretch. And Stretch being, of course, the newcomer. Stretch attacking some of the money market funds, of course, but Stretch, more importantly, in my view, partially attacking the currency. Hopefully, over time, Stretch, if you're able to create kind of like a super TradFi coin that's always at 100, hopefully over time, Stretch even takes, money that's sitting in, I don't know, big checking accounts of big corporations or something like that. It's so he's focusing on the product of the preferred, focusing less on the product of the MSTR share, the MSTR common. That product seems to be a product of the past. So I'm going to talk about that a little bit, and I would also tell you, of course, the mNAV, right? The usual debate is where's the mNAV at? And of course, we get distracted because, MSTR mNAV right now is at almost a 1.6, a little under 1.6. It's the second time it's been this low in 1 year, and people are upset about that. And in this video, I would usually remind you of the inevitability. I mean, if you believe in Bitcoin, it's either Bitcoin's going to win or it's not going to win, and the whole investment is going to disappear and everything's going to fall like a house of cards. To be invested in this company, you have to believe Bitcoin is going to win. If you believe Bitcoin is going to win, you likely believe in the inevitability of Bitcoin being $1 million because fiat has no bottom. And so a lot of people are saying, early 2030s, like 2030, 2031 is probably when we're going to get there, like 2 years or 3 years after the next halving. And that's roughly what the Bitcoin 24 model tells us here. And so, of course, if you take into account the fact that really you can't really go too much below a 1x in mNAV, like temporarily you can dip to a 0.9, but as Saylor told us before, and as I've seen a few treasury companies thinking about these plans, there will be buybacks, right? There will be common stock buybacks if the mNAV were to go below 1. So I think 1 is roughly the floor. So essentially, you got a 10x in the price of Bitcoin coming up within the next 6 to 7 years, right? And the maximum loss on the mNAV is moving from 1.5 to a 1. And so there is that margin of safety in the price of Bitcoin, in my view. So these are the usual 3 things I would remind you of in these Sunday videos. But we have weekend FUD. This has been bad on the X sphere. There's been a lot of, I don't know, weird takes, odd comments. So I'll begin with the simpler stuff. These are not weird takes. These are just interesting takes on the common ATM. Of course, that's the big debate of the moment. So let me address some of my thoughts. So why did he stop the common ATM? That's the big debate. I weighed into that debate, 3 days ago? And what I said is that I wish he had continued the ATM. I love the common ATM, but I also trust Saylor. And, I think he probably has a good reason to have stopped it. I don't know why that is, but here are some of the reasons as to why I think he may have stopped it. And so, first point, of course, is that the common ATM may actually continue in a very big way over time if the issuance of Stretch is insane. Like if he issues, like what if what if the issuance of the Stretch preferred is through the roof? Like I don't know. What if he issues $1 billion a week worth of Stretch? Think about that. In 52, I mean that'd be insane, right? But in 52 weeks, you could have $52 billion worth of Stretch, and so in that case, yeah, you definitely need to do the common in order to pay for that monthly dividend. And of course, he stops doing the common, but there is a carve out for paying the dividends. And Stretch is a monthly dividend. So if Stretch is extremely successful, we might see him continue to do the common in a major way, which would make me happy. So if I want to see my common ATM come back, I want Stretch to be so successful. And this is why, of course, the preferreds are so crucial to MSTR's success. So I think this is a very valid point, and we will see the common ATM again because of that. And I hope he's very successful with Stretch. And Stretch needs to reach 100 before we see big issuance of Stretch. We're almost there. He sees a bull run intensifying in the fall. That could be another reason. He wants to limit dilution prior to a big bull run that he anticipates. That could be a reason. And you know, as I see Jackson Hole is beginning to trend, unfortunately Jackson Hole starts on Thursday, so we have to hold our breath until then. And then mid-September we have a rate cut meeting, and you know, it seems people seem to believe there's going to be a rate cut, 25 basis points, 50 basis points. At this point, I'm done hoping for a rate cut. I will never tell you I believe a rate cut will come. In my view, at this point, it's become entirely political. In my view, a rate cut will come in May of 2026 when a new Fed chair is put in play. And I heard the name is going to be Mr. Dove. It's going to be the new Fed chair that's coming in May. That's my take, because, you know, I've gone through the years of hoping for a rate cut and no rate cut. At this point, there should obviously be a rate cut. It is so obvious, but they're not coming. So that's another point. People see a big bull run in the fall, and in that case, you want to save some common ATM. Another point is some people are saying he's not doing it because he's hoping to initiate a squeeze on MSTR, and that would make sense from a double standpoint. You know, you would get rid of a less desirable form of shareholder, because since we're not doing the converts anymore, since we've moved away from the converts, then the shorts are not desirable anymore. You know, the shorts used to be desirable when we had the converts. That's why, you know, 4 quarters ago, he used to say, we welcome the shorts. We want you to know, Mr. Short. We want you to know that we're always going to buy Bitcoin. But that's because he was earning a premium in the form of a higher strike price, and in the form, of course, of a low interest rate. He was earning that premium by issuing convertible debt. But now that he's not issuing convertible debt anymore, really there's no point having the shorts anymore, because the shorts increase volatility, but you're not really gonna be collecting that premium for yourself via the converts. So that makes sense why you would stop the ATM to hope to initiate a short squeeze, and not so much to hurt the shorts, but more to have a more aligned shareholder base. You know, I think this is very important, having an aligned shareholder base. Lots of people saying also that paying a small dividend on MSTR, like a token dividend, you know, like 0.5% or 1%, could actually prevent a lot of shorts from piling in, because, of course, 1% on $1 billion short is a tremendous amount of money. It's a lot of money. So a lot of people would be like, okay, well, just put a dividend. Maybe you could do that. Maybe you could have a temporary dividend policy. And based on the shorts, you can declare like a surprise dividend. Surprise! We're sending every MSTR common shareholder, we're sending you a few bucks. Surprise, surprise! And then you could not hurt, but, you know, convince the shorts to leave their short position by doing that. So that's also an interesting point in my view. And this one I don't think is it. But some think that he may have stopped the common ATM to appeal to the S&P 500 committee in September for increased odds of inclusion. And in my view, it will take years for MSTR to be included in the S&P committee. I may be biased here. I'm still sour about them just not adding Tesla, because Tesla too few models. There's not enough car models. They took a random thing to exclude a company. I much prefer the NASDAQ. The NASDAQ is rules-based. The NASDAQ is so much better. There is no geriatric committee on the NASDAQ, stuck with old ideas and telling you, nah, we don't want you. No, the NASDAQ is a formula. I love the NASDAQ so much better than the S&P 500. S&P 500 has kept out so many high returns companies from the total return, and it's a tragedy in my point, because a lot of retirement accounts, a lot of 401ks just have the S&P 500 in there, and you're kind of keeping the returns at bay, and of course MSTR is the best story of the past 5 years. It's the best story of the past 5 years, and it's been in the NASDAQ for nearly a year now, so kudos to the NASDAQ. Anyways, so these are some of the new thoughts and the new reasons as to why he may have stopped the common ATM. You may have read them on X before hearing me tell them, but that's my first time addressing those on the channel. And then now for the fun part, which is addressing the FUD, which is, I don't know what is going on with X right now. I've noticed similar FUD pieces on other treasury companies, but I've noticed like a lot of guru accounts, a guru quote unquote, right? There's no, I'm not saying it's a guru. Anyways, a lot of accounts which kind of came out of nowhere and published really weird anti-MSTR theses over the weekend, and so I'm just going to go through two of them. Interestingly, both pieces had to do with BlackRock. I think BlackRock gets a lot of clicks where you're trying to do some engagement farming. So one of the pieces that got tens and tens of thousands of views was, BlackRock owns more Bitcoin than MSTR. And here's what BlackRock's going to do. Because Larry Fink owns so much Bitcoin, Larry Fink is going to sell a bunch of that Bitcoin all at once. And he's going to dump the price of Bitcoin. And he's going to trigger a margin call on MSTR, who then is going to, because if there's a margin call on MSTR is going to dump even more Bitcoin. And then BlackRock's just going to trigger the biggest winter, the biggest bear market. And this got tens and tens of thousands of views. So, newsflash, there's two newsflash. First of all, the Bitcoin that BlackRock quote unquote owns is IBIT, right? It's in IBIT. Most of it is in IBIT. And you can't just sell the Bitcoin in the ETF and sell it on behalf of your clients. You can't just dump the Bitcoin. BlackRock is a pass-through entity. And people make the shortcut too quickly to say, oh, BlackRock owns this much Bitcoin. No. It's a pass-through entity. It's in street name, right? The Bitcoin does not belong to BlackRock. The Bitcoin belongs to all of the people who have it in their ETFs and who are not interested in selling that Bitcoin, who are maxis. Right, that's what it is. Who have been waiting for a long time to own Bitcoin in an institutional way, and BlackRock, there's no way they are going to like hurt the trust that they have with their clients. And sure, I am fully aware there can be some shenanigan intraday between the moment the flows come in and the moment that the buy is initiated. Like I'm fully aware of that, but that's a very small amount. That could be what, 1 billion. 2 billion, not nearly enough to trigger any sort of mass sell-off in Bitcoin. You have technical delays, yes, between the movements in IBIT and the movements in BlackRock, but no, you're not going to take 5% of your bag and dump it to create a crash, which then is going to trigger a margin call on MSTR. And this FUD, by the way, is recycled FUD. This FUD is so 2022. We saw it in 2022 too. And in 2022, it had an ounce of truth because they had the macro strategy division, and they had borrowed against one of their holdings, one of their bags. They had borrowed a little bit to buy more against one of their bags. So, and in 2022, it was already a stretch. But in 2022, it had an ounce more of validity. But today, this is gone. Like, this is so 2022. Let's just briefly look at it. Debt. I'm talking about the convertible debt. How much debt do we have? 8 billion, right? That's 11% of a Bitcoin bag at current Bitcoin prices. 11% of a Bitcoin bag. 8 billion of debt, 74 billion worth of Bitcoin. You'd need an 89% drawdown in order for, well, there would not even be a margin call. I'll give that in a second. But in order for selling Bitcoin perhaps being in play, you need Bitcoin to be at $13,000 for selling Bitcoin to be in play. So that's point number one. And then point number two, of course, is that debt is not mark to market. That debt is staggered. It has maturity that is staggered from 2028 to 2032, so an average in 4.5 years. So on average, not only would you need Bitcoin to be at 13,000, but it would need to be at this level at 4.5 years, 4.6 years. So yeah, it's like we have one more Bitcoin halving coming up. Before we get into that stage, and for some of that debt, like the 2032 debt, 2 Bitcoin halvings coming up. So I would argue this is a very, very solid balance sheet. But of course, if you believe Bitcoin is going to go to 13,000 and you believe that's going to happen, within those maturities, then yeah, MSTR could sell Bitcoin, but that's very far-fetched. And then of course you have the preferred, but the preferred, while they are technically debt, well, right now we don't have that many preferred right now, but it's only technical. In reality, it's a perpetual preferred. This is permanent debt, right? Sailor has permanent debt, so we don't have to worry about the preferred from a liquidation standpoint, and that's something reassuring, and that's why he's done with the converts and moving entirely to the preferred. So that's for this FUD. And for the last piece of FUD, which is a spin, you're gonna love. This is BlackRock again. This is another FUD piece, but this is another spin. So in this spin of this thread that I've seen, and by the way, some of these threads have been copied and pasted, like they're the exact same thread published by different big accounts. So this is another one. Oh, BlackRock owns 5% of MSTR, and so they are gonna force Sailor to sell Bitcoin somehow directly. Somehow they're gonna get a seat on the board. They're gonna fire, Fong Li, or they're gonna fire Sailor, or they're gonna get a seat on the board, and they're gonna get him to sell Bitcoin to trigger a crash. That's another FUD piece that I've seen over this weekend. BlackRock is going to force MSTR to dump the Bitcoin and trigger a market crash. So let's put that to rest. It depends on the stats, but roughly half of MSTR is owned by institution. The other half is owned by insiders and is owned by individual investors. So those, of course, in my view, will always vote in favor of the company. The rest is institutional investors. And so first of all, for your FUD piece, they use BlackRock. Why do they use BlackRock for the FUD piece? This is Yahoo's data. The biggest institutional holder of MSTR, of course, is Vanguard or Capital International Investors. Why don't you use Capital International Investors or Vanguard in your FUD piece, right? Or why don't you use Morgan Stanley or ClearSprit or Cantor Fitzgerald or JP Morgan, which has actually been pretty aligned? Why don't you use any of these shareholders, right? Why do you have to use BlackRock for your FUD piece? Because, frankly, you should use the 7% one, right? It would be more compelling, right? Well, that's because there's a flaw in the design. Because traditionally, for the longest time, and actually there's a Warren Buffett rant about this for the longest time. Warren Buffett says, we don't vote on our shares. We don't vote on our shares. Institutional investors, there is a very, very long tradition of them not voting on the shares because just like for the Bitcoin ETF, they are just a pass-through entity. Most of the Bitcoin is, take Vanguard for example, right? Vanguard has enormous trillions of dollars of money under management. BlackRock, the same thing. They're pass-through entities. They manage that money. They manage those MSTR shares on behalf of their clients, most of which are retirees. And so that's why they don't vote on their shares. And BlackRock one time tried, you may remember, this was 2019, there was an open letter to CEOs, and they tried to, I can't remember if it was on climate or DEI or ESG, but anyways, they tried to start saying that we're going to vote on certain issues. I'm pretty sure it was climate. We're going to start voting our shares on behalf of our clients. And do you remember the backlash that triggered? There was a tremendous backlash about this, and then they backpedaled. Why? Because no, BlackRock does not own $12 trillion worth of shares. No, BlackRock manages $12 trillion on behalf of people, regular people, you and me, mostly retirees, who don't even know they own these shares, by the way. And so trust is paramount, trust is of the biggest importance. And no, I don't buy the story at all that BlackRock is going to vote on the shares. They're going to get a seat on the board. They're not an activist investor. They're an institutional buyer. They manage money for others. This is not Carl Icahn, right? This is not Carl Icahn using their own money. And so no, I don't buy that a single bit. And even if you bought that, 5%. Sure, maybe you could get a seat on the board. Even if you thought you could change the entire fate of the company with how much Saylor owns, in my view, this is a FUD piece. You see this piece hurting a lot of companies. It just comes back on retail Twitter, retail X often, and this is a big old no. And frankly, to make your story more compelling, you should use Capital International Investor or Vanguard because they own more than BlackRock. So, anyways, so this was it for this video. I hope I was able to give you my thoughts on the FUD piece and my thoughts on the mNAV. And overall, I'm feeling pretty optimistic, of course, about the fall coming. And I can't wait for August to be over, because this August has just been the most boring and also a little bit disappointing market. It hasn't been a catastrophe, but it's been disappointing and boring. Oh my gosh, has it been boring? Anyways, this was not investment advice, not financial advice. This is only entertainment. I'm hoping you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.